Welcome to Talk Tickers. Today, we're going to decode Uniti Group's very first earnings report since closing that massive merger with Windstream. And let me tell you, it was a quarter full of contradictions. So let's get in there and unpack what really happened.
So the whole story of this earnings call is really a tale of two numbers. You've got this massive headline earnings beat on one side, we're talking nearly $5 a share, and then on the other, you have a stock that actually sold off. So what's the deal? Well, the disconnect comes from a huge one-time accounting gain from the merger that, investors saw right through.
To really get what's going on with the market's reaction, we're going to walk through four key areas. First, we'll peel back the layers on that headline number. Then, we'll get into management's big story on AI. After that, we'll dig into the metrics that truly matter right now. And finally, we'll look ahead and give you our take on the next call.
All right, let's dive right in with those headline numbers. On the surface, Q3 looked absolutely spectacular. But, as is so often the case in this business, the devil's in the details.
Okay, so here are the key financials. Revenue came in right where the street expected. No surprises there. And adjusted EBITDA margins were pretty healthy, right around 45%. But, and this is the huge but, that GAAP EPS of $4.92, that number is completely juiced by a $1.685 billion non-cash gain from closing the Windstream merger. If you strip that out, the picture looks a whole lot more ordinary.
And that, right there, explains the market's reaction. The stock dropped over 2% because, sophisticated investors, they just ignored all that accounting noise. They focused on what really matters, the core operational performance of the business.
Okay, so if the market was kind of skeptical, what was management's big pitch? Well, it was an aggressive, and I gotta say, pretty compelling story about a generational opportunity in fiber, all driven by the explosion in AI.
CEO Kenny Gunderman really set the tone with this quote. Management is basically betting the company's future on a simple idea. The demand for fiber from AI and all these data centers is just exploding, and they believe Uniti is in the absolute perfect position to capitalize on it.
Now, to back this up, they pointed to this key metric. Their sales funnel from the hyperscalers, think the big tech giants, now makes up about 30% of their monthly recurring revenue. And crucially, they made a point to say that the total contract value is skewed even higher. This is the tangible evidence they're using to sell that big story.
They also pointed to some really solid operational highlights to back up the big picture narrative. Their underlying fiber revenue grew a healthy 13% year over year, and their consumer business Kinetic saw record customer additions. So these are the data points they're using to argue that, hey, the core business is strong and it's actually getting stronger.
Okay, let's switch gears and move on to what the really sophisticated investors are digging into. Beyond the headlines, beyond the big narrative, they're scrutinizing future guidance, the stock's relative performance, and, most importantly, execution risk.
So let's start with the guidance. After a massive merger like this, the market was probably hoping for an upward revision to the full-year outlook. But instead, Uniti just reiterated its previous guidance. This was a pretty clear signal that the financial benefits of this merger, they're not going to be immediate.
Now, this slide here is really interesting because it gives you that all-important context. Yeah, Uniti is up over 12% in the last year, which looks great compared to the broader REIT sector, which is actually down. But it has significantly lagged its communications peers. That group is up nearly 29%. This underperformance is exactly why investors are so laser-focused on execution right now.
So what this all boils down to is that the entire bull case for Uniti now comes down to flawless execution in four key areas. Number one, integrating that massive Windstream merger smoothly. Number two, ramping their build crews from about 115 all the way up to 400. 3, converting that really exciting AI sales funnel into actual signed contracts. And 4, managing the decline of their old legacy services so it doesn't drag down the rest of the company.
So, where does all this leave the stock? What should investors be watching for in the next quarter? All right, here's our take.
Our prediction is for continued choppiness in the near term. This is what you'd call a show-me story. The market is going to sit back and wait for concrete proof. Proof on those merger synergies, proof on those growth targets before it's going to give the stock any more credit. The single most important catalyst to watch for is pretty simple: the announcement of a major contract with a hyperscaler. One single event like that would validate management's entire AI narrative, and honestly, it could be the key to unlocking this stock's true value.
And all of that brings us to our final rating.
Market perform. Look, the long-term story around fiber and AI is incredibly compelling, and Uniti absolutely has the assets to be a major winner. But that potential is currently balanced by some very real and very significant risks of integrating a massive merger while trying to scale operations at a crazy pace.
And as always, just remember this analysis is for informational purposes only. It is not financial advice.